Alright, so today I wanted to make a video on what I'm doing in my portfolios and just kind of go a little bit deeper into what my plan is for this year. So first things first, if you get value out of the video, please like and subscribe. Really appreciate that. So getting right into it here, the biggest move that I've been making recently and going forward is Microstrategy and MSTY, which is a covered call fund on Microstrategy. In my personal portfolio, these two stocks, or I guess technically one's an ETF, make up the majority of, literally the majority. I think we're looking at probably 60 or 70% on any given day, my personal portfolio. Now, a lot of people hear that and say, that's super risky, all the usual stuff you'll hear. And to a large degree, they're right about that. I mean, I'm not denying that it's super risky, but I'm very young still, and if it works out, I'm going to come away looking like an absolute genius, and I'll be retired sooner than 99.9% of the population, living better than 99% of the population. And if it doesn't work out, well, honestly, I'll still probably be just as well off, if not better, than the average person my age. So understanding risk-reward is one of the most important things, if not the most important thing to investing. I think psychology probably is up there as well. Just being able to withstand the psychological aspect of it. But understanding risk-reward, I think, is super, super, super important. And when it comes to MicroStrategy, my thought process is quite simple. I think that Bitcoin is going to continue outperforming the stock market. And given that, it's likely that MicroStrategy outperforms not only the stock market, but Bitcoin. Now, again, there's a lot of caveats. There's obviously things that could go wrong, but that's my thought process. And not only that, I think that it makes zero sense to not have at least some exposure to Bitcoin, whether it's directly or indirectly in your TFSA, RRSP, whatever you're in the States, Roth IRA, whatever you're investing in. It makes zero sense to not do that. It's only a matter of time until it's a normal thing for everybody to do that. A lot of people probably ask, what would it take for you to sell some Bitcoin or, MicroStrategy? And for me, I don't think we've reached, equilibrium or a time to think about selling. Once it's, and I've made special videos about this, so this isn't anything new, but I'll repeat it. Once it's normal for financial advisors and pension funds, et cetera, even countries to have a Bitcoin reserve. Once that's a normal thing that's done without even thinking about it, then I'll be like, okay, I think we've probably reached that equilibrium point to where it will continue to happen. Like I think Bitcoin will always outperform the stock market, at least over a long enough period of time. But I think that the returns will start to come down once that's a normal thing. But you also have to keep in mind that there's only 21 million coins, and within the next decade or two, not only is the Bitcoin supply going to start getting lower and lower, within the next generation, the supply of Bitcoin is probably going to start going down. And this is something that a lot of people don't realize, is that it's not like the price that the amount of Bitcoin is fixed. A lot of people lose their Bitcoin, right? They have laptop, like they don't have hardware wallets, they don't have their seed phrases written down, and they lose their Bitcoin. People like Michael Saylor have said, now again, whether or not they'll do it is one thing, but I'm sure at least some of them will never sell their Bitcoin, or at the very least will not sell all of their Bitcoin, which will be a de facto donation to the people that are willing to do what is, I struggle to say the word the right thing, but the smart thing, I think, is a better way of putting it. So that's important. But when it comes to MicroStrategy, long story short, I think they're going to outperform because they have outperformed over the last 5 years. It makes no sense that they wouldn't. The one thing about MicroStrategy is they've talked recently about just issuing shares just straight up and buying Bitcoin. I don't like that strategy. I think the strategy they're currently using, which is they're not issuing shares. They're issuing, convertible bonds, which have a call option aspect to it. So the only way they convert to shares is if the price goes up fairly dramatically. So that strategy, I think, is by far the best strategy because it has more upside for MicroStrategy, and I think it has less downside. Issuing shares, I think, is worse in both directions because it's a guaranteed way to dilute people, not like the way they're currently doing it, which has no guarantee that they'll dilute people, and issuing shares at, whatever, the current price is worse than issuing shares, 50, 100% above where they're currently at. So I don't really like the idea that they're talking about. They haven't gone through with it yet, but I think doing what they're currently doing is the best way of going about it because it's already unlikely that a company ever gets more Bitcoin than they have. It's possible if someone starts doing it soon, but by the next halving, it's going to be pretty unlikely. Like the likelihood that another company can accumulate 500,000 coins is pretty unlikely, especially if the price of Bitcoin keeps going up, which it most likely will. So other positions here, MSTY, this is one I've talked about before. This is my second largest position. I'm up quite nicely on that. QLYS, that's my third largest position. I still really like them. Most of these I will not be adding to just because I don't want any position other than maybe MicroStrategy to be more than about 5%, 4 or 5% of this portfolio. I still really like QLYS, though I am down a tiny bit on that one. EQB, this is one that actually looks like I'm up the most out of any of these positions. This is one, again, I'd love to add more to, but it's already enough that I'm not going to be adding to it. Go Easy, this is one I've talked about. I think this one's a buy right now. If anything, I really like them. Paycom Software, I'm up nicely on them. I'm not looking to add any more. In fact, I'm selling calls on them. Domino's Pizza, I like them, although this is a full position. Skyworks has not really gone anywhere over the last year. I still think they're a solid company, so that's kind of just a hold. Applied Materials, I think this one's a buy right now, although I have pretty much a full position. MSTY. So I haven't talked much about MSTY. I'll get into it briefly. And the thought process on MSTY is quite simple. Number one, it's tied to MicroStrategy, which I think will go up over time. So I think that the share price of this will go up over time, although it won't keep up nearly with MicroStrategy because it's a covered call fund. But you also have to keep in mind that this ETF has roughly 100% dividend right now. Now, again, it varies a lot month to month. I think it's gone as high as 150%, as low as about 40, 50%. But the thought process on this right now is, well, the dividend is roughly 100%, right? Obviously, it could change a lot month to month. But so basically, the only way you're going to lose money on this investment, not the only way, but by far the most likely way, is if MicroStrategy goes pretty much like down like 80, 90% in the next year. And in a year where Bitcoin is projected to go up, we are still in the middle, if not early stages of this bull run, this cycle. The chances of MicroStrategy going down significantly is quite low. Now, again, it could go down 20%, 30%, I could see that, but that's not going to make you lose money. So to me, this ETF is about as easy money as you can possibly imagine. Now, again, there certainly comes a lot of risk, but if I had to bet money on literally any stock, any ETF being up over, let's say, 20% over the next year, it would be this. When you account for dividends, it would be this, because when they're paying that high of a dividend, the MicroStrategy would have to be down like 50, 60% to lose money in this investment. So this is probably my biggest no-brainer. Which this is one of the largest positions in my personal portfolio. This is one of the largest in here, and I do have more puts sold against this, which are expiring next week, which I think are around $30, $31 a share, which looks like they might get filled. So this will only grow. I won't get this much more than 5-ish% of this portfolio, just because it's $1.2 million. The next one, Southern Copper. This is a position I've taken recently. I really like copper over the next decade or two. I think it's a good investment, and I think Southern Copper's at least the best way of getting exposure to that, in my opinion. There is an ETF, but I think Southern Copper is the best company, so that's why I own them. Manhattan Associates, this one I think I've had since then. AOS I've had for a little while. Watts Water Technologies, this is one I'm probably going to sell calls against because I probably want to get rid of it. Same with CDW. Old Dominion Freight Line, I definitely want more of this, although I still think it's a tad expensive where it's at right now, but I definitely do want more of it. RSP, that's the S&P Equal Weight Index. IBP, this is one that I've bought recently. I like them. URA, this is my uranium play. I definitely plan on increasing this, both personal and mock. Masco, that's one that I'm probably just going to be holding. Dollarama, this is one I'd love to add more to, but it's too expensive. ALLE, another example there. I would like to add more, but definitely on a pullback. IIPR, honestly, I really like IIPR where it's at right now. It has like an 11% dividend. One of their tenants defaulted on their loans. I think it was actually their biggest tenant. Some of their loans. I don't think it was all of them. And that caused the stock to be down like, I think it's down like 30-40%. So obviously that's concerning, but I still think they're going to be okay. They're going to get a new tenant in there and they'll be fine. Now, again, it may take a while to get back above $100 a share, which is where they were at for most of last year. But when they're paying an 11% dividend, and I think they're going to be okay, like it's not as if revenue is going down. It's not as if FFO is going down or earnings or any of that stuff. Their profit margins are still pretty much the same, so I'm not concerned there. Vici Properties has came down a little bit, but I think that's due to the REIT space as a whole selling off. I think that they're one of the best REITs out there. So I will be adding more to them at some point. Microchip, honestly, I think that I used to like them. I must admit that I was wrong about them. I am looking to sell this position. Pulte Homes, this is one of the better home builders. I'm definitely looking to add more of them. BAM, this is one that I would add more, but I think it's too expensive where it's at right now. And then we have EVVTY. This is another one I'm not sure about. I only have 50 shares, which is like nothing. CNQ, I think, is one of the best oil and gas companies. I'm definitely looking to add more of them. And then BITO is the Bitcoin futures ETF. That's one I'm just trading options on, so that's why I have a position in it. And then I have a whole bunch of puts and some calls that I'm selling here. This is also, like, I'll just talk briefly because I don't want to make this too long, but this is one of the easiest ways to make money when it comes to stocks. Options, whether it's covered calls, whether it's cash secured puts, this is a very, very easy way of making money, especially in an expensive market. You want to buy a stock, but you know it's too expensive. Sell cash secured puts, meaning, if a stock is at $100 and you think it's worth 90, sell a 90 puts, make some money. And if the stock stays above, okay, you still make a little bit of money. If it goes below, you get the stock at the price you want, and you get paid. So cash secured puts are a no-brainer in my opinion. And same for covered calls, right? If you have a stock that it's like, hey, I own this stock, it's way too expensive, or it's too expensive, I'm going to sell calls. I'm going to make a little bit of money, and if it continues to go up, great. I'll sell it. I'll make a little bit of money. If not, I keep the shares. So options are a great way to increase returns. Now again, there is definitely you definitely do have to have some experience. For someone who doesn't have a lot of experience, they're definitely not for you. But if you have a lot of experience, I definitely would recommend it. Now again, you can still lose money, obviously. So do your own research. But I think that they're an easy way to make money. Now, again, you have to be patient. You can't be too aggressive, and you have to follow the market fairly close. But if you do that, I think that they're a no-brainer in my opinion. So anyway, like I mentioned at the start of the video, if you liked it, if you get value, please like, subscribe, comment, all that good stuff, and stay tuned for more.